So today's session is going to be very interesting, but before that, let us recap what we have done in the last three sessions. Our session number one was on understanding what the role of finance is in a not-for-profit organization, and I think you have been able to get an overview of the kind of work that finance and finance management is required to do in a not-for-profit, and how we are as programmers actively involved in the finance function. Although we tend to stay away, but we are an integral part of the function of the organization as far as finance is concerned. The second session was, of course, the our bread and butter, which was on grant management and budgeting. Last session, session number three, was on the overview of financial statements. Why should there be financial reports of an organization, and what those financial reports are supposed to do is something that we had seen. And we had seen that probably as the brand ambassadors of an organization, it is the programmers who are carrying a lot of information for the external stakeholders to be able to take decisions, by those external stakeholders. Therefore, our role in terms of being able to at least put forward our financial numbers to various stakeholders, be it donors, be it government, be it anybody, is very, very critical. And we had seen how does a balance sheet look like, how does a income and expenditure statement looks like, and how does a receipt and payment statement looks like. The income and expenditure is based on accrual, and the receipt and payment is based on cash basis. Very simply, we had studied all that. So if you are able to see your own financial statements, you will be able to better relate and see also how are you contributing to the overall financial uh, health and progress. Both health meaning the current situation of the organization, progress means in terms of the future. I mean, what is the trend looking like? Today's session, so we move on to session number four today, and this session is equally interesting. The session is on four areas of our work that we do. And again, here we are an integral part of all these four things. One is procurement, and related to procurement is contract management, because contract management is actually a part of the procurement process. Okay, so why I've kept contract management separately is for you to understand that before signing a contract or before signing any paper which brings about a contractual relationship between your organization, which you are representing as an authorized person, and any third party, how does that arrangement need to be seen? It's not that you just put your signatures, but you need to also understand the dynamics of what a contract is, and therefore a separate section on contract management. Two more things that we are going to study, not in great detail, but to understand what is fixed asset management and what is inventory management. Inventory meaning, majorly for you, the inventory is the program supplies. So if you are buying any product for goods for program implementation, that's the inventory that we are talking of. Of course, there is inventory in terms of stationery, supplies, other things, office hygiene, all that which is being taken care of by admin. That's not what we are going to study, but basically the program related goods. For instance, if you have nets, if you have seeds, if you have compost, if you have whatever, I mean, if you have medicines, consumables, test kits, all that is part of inventory, which is program inventory, and that gets consumed actually. So let's begin our session. And the layout of the session is something like this: one, procurement; second, contract management; third, fixed asset management; and fourth, inventory management. That's how we are, scheduling our session today. Very important for you to understand. Why? Because at the end of the day, the program people are, and you will see that, you will see yourself in every box, every slide in this presentation, despite the fact that you may not want to, but then you are actively there. And if you do not understand your role in that process, probably you will not be able to do justice. There will be mistakes, there will be all kinds of problems that you might be faced with. There could be disciplinary action because of a certain loss that has occurred to the organization because of your reluctance to actually understand all this. And this is not something very great. It is very simple, following the the principles laid down in policy is what has to be done. Nothing more that needs to be done, except that you should know what is to be done. So the first thing is procurement. And here, as the last point in this slide is more important. So we are, as programmers, procurement committee members, okay, the PC members, we are part of the procurement committee. I think all of you would be part of procurement committee somewhere or the other, whether at your head office or whether in your field location. Why? Because the procurement committee member, as a programmer, you are a programmer, but you are a procurement committee member because you are supposed to contribute or provide value to the committee's decision in terms of whether the product meets your requirement or not. Is the procurement being done for finance people? No, it's being done for you, for your project. Okay. So unless you are satisfied, because if you were not part of the procurement committee and somebody else was taking the decision and goods and supplies were to come which were not meeting the requirement that you had decided on or you had, indicated, then probably there will be a problem in field implementation. So you have to be an active member of the procurement committee in terms of seeing what is being purchased, is what is your requirement, and whether that purchase is being done within the budget limits that have been given in the budget for that particular project. Who owns the budget? Who is the owner of the budget? The budget owner is you as programmers. The finance people are only custodians of the budget. They are the custodians of the policy. Okay, so they need to see whether procurement committee took a decision, but what decision and what is your input to the decision will actually come majorly from the program persons. Okay. So as a PC member, as a person who has taken the decision and then the goods have come. So as signatories, to contracts, once you have taken the decision, there is a contract which will happen. And that contract, again, you will find that as a person representing the organization, you will be supposed to sign that contract, okay, before the goods are received. Once the goods are received, you are users and verifiers, so you are the ones who will verify whether the goods have come in line with the contract or purchase order that we had given. Again, as users, so you are the users, okay. Now these are all your roles, okay, in your, if you see yourself in the procurement process, you will find all these roles. You will find yourself as the person who's requiring a particular good. You will see yourself as a decision maker in procurement of that good. You will see yourself as signing off the contract for the vendor. You will receive the goods and verify whether the goods are as per contract, and you will finally use the goods, okay. So if I were to ask for agri product or some kind of irrigation, solar irrigation product, and the product was to come very different from what your expectation was or what your requirement is in the field, then that entire procurement will go waste, because then you cannot go to the vendor and say we did not order. You have ordered, but that product is being wrong because you were not actively participating in the procurement process. So it's mandatory. It is mandatory, I've written, that non-finance program staff should have knowledge, thorough knowledge, I'm saying, not just superficial knowledge, but complete knowledge of the procurement process for various goods and services that have to be purchased by you for your project. That will ensure efficient and effective procurement, meaning efficient meaning that you will spend the right amount of money, and effective means that the money that has been spent for purchasing of the goods has resulted in the required outcome. Okay. So those are the two major things that you will be actively involved in procurement. Now, what is procurement? Procurement is nothing but the process of acquiring certain goods, certain consulting services, okay, and works. Generally, we do not do works unless our programs require us to create some kind of physical infrastructure, watershed structures maybe, or goatry sheds. Those are some kind of works that will normally be part, or you want to construct a labor room, or you want to construct some store or some such thing, will be what is for that there will be also procurement. But broadly, when we talk of organizations, The organizations are talking, we are talking of basically procurement of goods and services. Now, procurement of goods means you are acquiring the goods for the use in your particular project. Acquiring services means you need somebody to provide. Technically, people are competent to provide that services, and we need those services for our organization. Now, majorly, it could be for our projects. It could also be for our organization. To meet the desired objectives. So the desired objective in a project is that your products are such that they benefit the beneficiaries. That's something that is the outcome of that particular procurement. Now, procurement is an end-to-end process. I mean, basically, it's a function. So within finance function or the finance policy, normally you have the procurement policy. Sometimes the procurement policy is separately formulated, but it is normally part of the uh, finance policy. And this is an end-to-end function, as we will see. End-to-end meaning there is a full process, okay, from identification of a need. Do we need this product? Okay, to receipt and payment, okay, and finally record keeping. So if you have any goods that you have purchased, you will need record keeping in terms of not only receiving them but also distributing them. If you have assets that you have purchased as goods, then you will have to issue them to people, and that issue is the record keeping. Okay, so that is what I'm saying. So it's not, it's a full process from right from the time that we want a product. Okay, so the need for the product should be the basis for your procurement, and up to the time that the product has kind of, been recorded in terms of issue. So for instance, you have procurement of nets. Okay, if you have nets procurement, the record keeping will be in terms of receipt, verification, approval, payment, and record keeping. Means that that inventory was included in our inventory records and then has been taken out from the or issued from the inventory records to you for distribution, and you will finally give some kind of proof that that particular net, those particular nets were given to the beneficiaries by giving some kind of a receipt to them, which will ensure that the inventory has been finally consumed. So that's the spectrum of procurement that one has to understand. Now, what are the key aspects of procurement? Okay, so uh, we have seen procurement. Procurement is a very simple thing. It's basically, you know, uh, in terms of the definition, very simple, that you have to buy something. We buy as as individuals, don't we buy goods every day for our personal use? Yes, we buy. But do we apply some of the principles that yeah, are required for procurement? Yes, we do. We want to get best value for money. Okay, so the same thing you have to do for the organization. You have to think as though this product is being purchased for my own consumption, although it is for the organization's consumption. But the thought process in terms of, what is the best for me. If I were, so for instance, if I am buying something on Amazon, I will try to get the best value for that money. Okay, for 100 rupees that I will spend, I'll try to say, well, can I get a product which is 200 for 100? Okay, that's what is called efficiency of procurement, but without compromising on quality. Will you compromise on the quality of that product when you buy it for personal use? No, you will not. But you will still try to get some, squeeze in terms of the money that you have to pay, so that you will feel that there is more value that I have got for the same 100 rupees that I spent. Same principles you have to apply here in procurement, although procurement here is a more systematic process, because in personal procurement, only you are involved. You are involved in procuring, you are involved in payment. But here, as organization, we are not. It's We are different from the organization. The organization is an entity, and we are a part of the organization. We are not the organization. We only represent the organization. Okay. So the key aspects of procurement is basically needs assessment. Okay, now, how does the need assessment come? For projects, it's very clear. It will be based on your program narrative or your program proposal that we studied in the grant management section and the budget, okay, in the grant contract. Generally, you will not purchase anything which is not included in the program narrative or in the budget, unless it is included subsequently through a post amendment in the contract, because then you realize that probably this was also something that you needed to have with you. So that is the need assessment, which is very, very important. You will not purchase anything for the sake of, just keeping it as storage. Second is cost. Okay. Now the cost is the value for money that I have just told you. This is through a process of price discovery. What is the meaning of price discovery? We will try to see what other competitors are giving for this particular standard product. I'm not saying we will compromise on quality, but for the same product, which is the same identical product, will we see what competitors are paying? Will we try to discover the price better? That is better price discovery, so that we get better value for money. That's what I'm saying. VFM is value for money that we are looking at. So procurement has to have cost efficiency and it has to have operational efficiency, meaning that that procurement resulted in the outcome, output or impact, as the case may be. Generally, it is output because products generally result in output. Was the net such that it did not have any problems once it was installed? That is the operational efficiency. Because if you get a net from where you probably that gets stolen from somewhere and is or does not last for more than 7 days, then also you have not been able to bring about operational efficiency. So operational efficiency is more in terms of ensuring that whatever you gave as your technical specification, the product has come in line with the technical specification. And how do you decide that? Because when the product comes, you are the verifier. The finance person will come and say, sir, is pe verify, please verify that this product has been received as per the purchase order or as per the work contract. Now, it is very critical for you to understand the technical specification when you initiated the procurement, so that when the material comes, you are able to verify that and say, yes, it is good and it will serve the purpose for which I have asked for it. The final responsibility for verification rests with you. So also the final responsibility for preparing the technical specifications also rests with you. And therefore it is so important that you are an integral part of the process. So cost efficiency and operational efficiency is a very important aspect of procurement. Accountability and transparency. Accountability and transparency means that the procurement process has been at an arm's length, on an arm's length basis. Means you do not have any interest in that procurement, or anybody known to you, you are not trying to promote that interest. That is what is called accountability and transparency. I'm talking of the ethical past. Accountability means ownership. Basically, accountability means you are you are taking ownership responsibility for that decision. As I've been saying, you would know right from the time that you asked for a product to the time that you have verified the product and distributed the product. Otherwise, once the product gets distributed, the beneficiaries are going to come back. Or if it is for a state government program, the state government is going to come back and say you purchased inferior goods and you have distributed inferior goods. Then, your accountability is questioned. Transparency means the entire process has to be such that there is no interest, that we can see it like a glass, see through. As we had seen the first session, our primary responsibility is transparency, because whether I see it or the donor sees it, the government sees it, the community see it, they see the process equally, like I will see it through the mirror. All of them will see it, because then there is the process has been done fairly or in all fairness. Adherence to policies. So procurement, the basic principle or the guiding documentation for procurement is the procurement policy. Okay. Now, procurement policy and procedures. Policy is your policy, and the procedures is, explaining the policy step by step. That is the difference between policy and procedure. This is also a tool for risk management. As we had seen, risk management is one of the important things financial management has to look after. What it does is it provides for a systematic way of doing procurement with accountability and transparency. That is what the procurement policy will do, and we'll see that in the next session, next slide. Supplier diversity. Now, what supplier diversity? What is the what are key aspects of procurement is what we are saying. So one of the key aspects is to have a robust policy which actually fulfills the requirement for procurement. That should be your guidebook, that should be your bible in terms of how procurement has to be done. Okay, so there has to be a good set of guidelines and rules to help you procure. The next one is supplier diversity, which means that you have to continuously work on improving your supplier database. That is what is called strategic sourcing. Means finally all procurement is given by vendors. Now how do you ensure that those vendors are giving you value for money, number one, point number two, and second, operationally the product is better than what it was last time. That is what is called a diversity, both in terms of cost as well as in terms of the quality of the product. Diversity also means that you are increasing competition. Okay, that's the cost aspect. So very important aspect of procurement is that you should be continuously improving your vendor management and your vendor database. The team effort, as you will see the procurement process, it is not done only by finance or by procurement at different or admin at different points of time in the process. There are different people who have to play a role, and that is what is the segregation of duties principle. Contract management, as we had seen, contract means that now there is a relationship between the two of us meaning the organization and the vendor. Just as when we actually go in for employment, we have a contract, an employment contract. Now what does that contract do? The contract says, as an employer I will do this, as an employee I will do this. Okay, and that is the terms and condition of the arrangement. Similarly for procurement, the contract management is, this is what I am responsible, this is what you are responsible, and now we are legally bound to each other to ensure that we are responsible to each other. That's what is contract management. So you can't just get out of the contract obligation by saying nay, I don't want it. And therefore the procurement process has to be such that the end result in terms of what the contract has been given is such that the product, once it comes, you will have to receive it, because that is something that is part of the technical specifications of your contract. So it's very important to understand contract management. Sometimes we just don't see that. I mean, we just go and say, ha, where do I have to sign? Okay, the program fellow is just saying, a finance person, this fellow has come with some papers, I just want to have to sign. No, you are finally will be held responsible for the contractual obligations as well as for the goods. And also, since you are a programmer, you will be accountable to the community and finally to the donor in terms of the operational outputs. Okay, because of that particular procurement. So what is procurement? I mean, the entire half of, or maybe 60% of our total grant contracts is procurement, or even more, I would say. Okay, because we are not including HR as procurement, although human resource is also part of procurement, but we are not talking of procurement of human resources. Okay, so if we were to look at our budgets generally, then out of 100 rupees you will have 30 rupees of HR cost. Just typically I'm saying 30 rupees of HR cost. Then you will have 10 rupees of your travel, you will have 10 rupees of your capacity building, which is also, and training, which is also procurement. A lot of program supplies, a lot of office supplies, they are all there. So you can find that about 70-80% of the budget is nothing but procurement. Okay, including HR, for instance. That is what I'm trying to say. So what has to happen is that you have to be very clear. Even contracts also, finally HR contracts are signed off by people who are in program. Okay, I am not talking of HR because this is a finance training, but procurement is also HR procurement. I mean, I'm not saying you have to procure them like goods, but you have to procure them from the open market. That is talent acquisition. We said procurement is acquisition. So HR is also human resources are acquired in terms of their talent, is what I'm saying. So, but we're not doing HR here. What I'm trying to only say that substantial portion of our budget is nothing but procurement. Okay, record keeping of the procurement process, because somebody wants to see whether that particular process was done transparently. That is the record keeping. Also, record keeping means how the products were received and how they were issued. That's partly fixed asset and inventory management, because generally we will have either inventory or fixed assets. Okay. The next one is continuous improvement in the procurement process. Now, what I mean by that is that as your organization evolves, your procurement policy should keep on changing with the evolution of your organization and the complexity required. When your organization is small, a small procurement, a simple procurement policy will be sufficient. So I always say that, well, any policy should match the requirement of your organization. You just can't copy paste a policy, which is generally what we do in the sector, and then we don't follow that policy because we are not equipped to follow it. Our organization structure is not equipped to follow it, but we just have a policy which is filed and filed. I am saying that even if your procurement policy is 2 pages, 4 pages, that is all right, but your policy should be such that it should actually be uh, you know uh, usable, and it should change with your change in your operations, your complexity, your size, everything. It will change. Now, in terms of procurement categories, all right, so what are the procurement categories that we have? And this is very simple. I have not added HR. So again, I want to say HR acquisition, talent acquisition is also procurement in a certain sense. But we are not doing that. So what do we purchase? We purchase capital goods, that is fixed assets. We purchase program goods and office supplies. We purchase services and we purchase works. Now, in most organization, works might not be regular, but capital goods meaning fixed assets, program goods and office supplies meaning inventory, and services meaning consultant services. So I want to get some communication campaign to be prepared. I want to get some research done. Okay, I want some kind of evaluation to be done. I want somebody to do the training for me. All that is nothing but services that you are buying from the open market of people who are capable and have the requisite expertise and experience to deliver those services. So basically, in a not-for-profit organization, we either purchase fixed assets, we purchase inventory, and we purchase services. Of course, we also have procurement of works, which is not a regular feature. Okay, that is what I want to say. Now, what are the 5 rights of a procurement? The 5 rights of procurement means right quantity. Quantity meaning what is required only by that much. Quality meaning technical specifications. Right place means that if I need, suppose I need solar pumps at 20 locations in the field, will I get the solar pumps in my office? No, I will get them at the necessary locations wherever I have to install those pumps. Okay, so that is the place that I am saying. But if we were to get inventory for office use, of course it will come to the office. Right time, because the right time is important for use of that product. Now, if I am not getting the product at the right time, then either I'm delaying my program or I'm losing out because that product will not have any value later on. And of course, the last one is right price. Right price is basically nothing but value for money or cost efficiency. So these are the 5 things that one has to remember. And this will also give you an idea as to when to start the procurement process, because the right time will tell you which place, how much quantity and what quality and at what price. So these are 5 things that should always be kept in mind, and you don't need to kind of put them, learn them by heart or anything. They will automatically come when you have systematized your way of working. Okay, that is what I'm saying. But I've only put them for you to understand that these are the 5 aspects of a procurement that will decide whether we have done a good procurement or not. Now, coming to the procurement policy. So I had said, how do we do procurement in an organization? We normally follow some guidelines, some rules, okay, that will tell us how to procure, okay, whether it's goods, whether it's services, whether it's uh, uh, works. What are the procedures that will have to be followed? So if I have to do some competitive bidding, then what procedure I have to follow in terms of getting the number of quotations, or how, what time do I give to the vendors? All those steps are also provided. Now, this means that we are doing everything fairly, transparently, and compliant with the legal requirements. Okay. So basically, it's a roadmap for procurement activities within an organization. Roadmap means that it guides you. That's why I mentioned the word guidelines. It tells you what, step by step, and in form of rules. This is one, number one, that this is what you have to do. Number two, after that you have to do this, and this will ensure that you are able to do effective and efficient procurement. Now, if you did not have procurement policy, then every person will have a different understanding of procurement. But the procurement policy is therefore a tool of risk management, because it tells everybody the same story. It's a tool of internal control. Therefore, uh, the benefits of a policy is cost control. It tells you how to do the bidding so that you guess the best cost. Transparency and fairness, as I have already said, that since the if you have a process laid down, then the transparency and fairness will automatically come normally, unless the human element is trying to abort the transparency and fairness. Otherwise, if you logically follow the transparency and fairness, this it will not happen. Risk management is something, meaning that you know what the framework is, and therefore you're not going beyond the framework and ending up in some risk. That is what it is. We have a full session on risk and control, so they are two coins, two sides of the same coin, and as we will see. So if we are managing, if we have proper internal controls, then we are able to manage the risk. That is what you know you can say. If you have good controls, then automatically your risk is managed or minimized. So while I have written control and risk management, they are, they go hand in hand. The last one is compliance. So compliance is in two sense. One is compliance with, any legal provisions. So if you are buying something, well, software, something which requires registration, something that requires KYC, those compliances is something that has to be ensured, but also compliance to the donor contract in terms of this particular material to be purchased. You had seen the budget that we had prepared, and there was a budget narrative or budget justification note. Their budget justification note, we have to explain, if we are buying software, this is the kind of software that we are buying. Okay, we are buying fixed assets. This is the model. This is the kind of fixed asset that we are buying, so that you are able to get the best estimation of cost in your budget, and there will be minimum variation between the budget estimates and the actual cost, and you will have a budget variance report which will show minimum variance, and therefore you might not have to take too much action in terms of having to handle the variance. Understood? So that's how I'm saying. Now, procurement policy elements means, what are the constituents of a procurement policy? Of course, is the purpose. The purpose, we have been talking cost efficiency, operational efficiency, all that, and also a framework for control. The authorization and delegation means, in your organization, the procurement policy will say, in our organization, these are the people who will do the procurement. Their roles and responsibilities are defined. Their authorization, the authorization means, based on the amount of procurement, they are who is authorized to do what, and what is delegated to other people. So segregation and authorization both are defined. If you want to purchase something which is 5 lakhs, then this position is authorized. Okay, this is their role. This is, and if there is 1 lakh, then it is delegated to this particular person. So everybody's, authorization is kind of known, and also as an authorizer, what is the person's roles and responsibilities is what is specified. Third thing is procurement process. Now, procurement process is nothing but the procedure part of the policy, means the rules that govern the policy, step by step, how you have to do it, and that is nothing but the procurement cycle. Okay, you remember the grant life cycle. Similarly, you have the procurement cycle. Now that procurement cycle should not be broken, because that is why I call it, this is an end-to-end function. The next one is procurement methods. The procurement methods actually are different from the process. So when we talk of procurement, please remember what is procurement, what are the categories of procurement, okay? What is the procurement process and what are the methods of procurement? They are all different, okay? Well, they are all different. While the process is more or less the same, the methods for procurement will be different based on the complexity, the amounts, and we will see that. So we will see what is the process and we will see the methods of procurement separately. That's very important to, for you to have a distinction of procurement process and procurement methods is very important. So first I will do the process and then I will do the methods. Okay. And if you go to a procurement policy and you don't find all of the methods there, it doesn't matter, because your organization is not at the stage where all methods should be included. And therefore, I'm saying all policy has to meet the requirement as of today and for the next 2 to 3 years. You can't make a policy which will address requirements in 20 years, because then you will not be able to implement that policy, because it will become too heavy for you to implement. So all policy should be contemporary. Contemporary meaning that it should serve the purpose as of now that particular area. The next one is documentation and formats for the procurement process and procurement methods and process. So what are the forms, templates that are there? Because you'll have to follow those templates. What are the records that you will have to maintain? How will the procurement committee report look like? How will the contract look like? How will a standard PO will look like? Okay. How will a lease deed or a rent deed normally should look like? Okay, because you should also have a standard rent deed in terms of office space, so that that can be used uniformly. So all that documentation and formats is very critical part, because then it ensures standardization. Next is vendor management, and I have been talking about vendor management in terms of supplier diversity. Vendor management means more vendors, more price discovery, the better. And vendor management, if you have better database, expanded database, then you also do not have any conflict of interest situation. Ethics is again something that I talked to you about, accountability and transparency. How do we ensure that our interest or anybody's interest is not involved in procurement? Why? Because why does ethics come in? Because ethics is the moral principle that we want to hold. Why? Because we are dealing with money. And when we deal with funds and money, always something in our head can take us in a different direction, not in the right direction. Okay, doing something right is what is ethical, and therefore the procurement policy will also tell us how the how ethical, how the what the principles of ethical conduct are as far as procurement is concerned. Very important. So these are some of the areas or the elements of a procurement policy. This is how a procurement policy format will look like. Aapka policy agar if it looks like this, then probably it's the right way of drafting the procurement policy. Now coming to the procurement cycle and the process. So this is the flow. Okay, this is like a flow chart, and this flow chart says this is how procurement uh, has to be done, irrespective of the method, these steps have to be followed. However, depending on the method, there could be difference in each of these steps based on the method that we have selected. So how does the procurement start? The procurement starts with, the technical specifications. Okay. Uh, uh, so the technical specifications are based on the need. The technical specifications are based on what we require. So what we required, for that we have to be very clear about our uh, about the kind of product, the kind of services, the kind of goods, assets that we want. And of course we must look at the budget. How much is our budget? So while a product of a similar nature might be of what we require might be available, might be available, which we have budgeted 100 rupees, might be also available at 1000 rupees. Now we have to be very clear that we are operating under a budget as a not for profit. We are accountable people. okay, because no, we are not profitable people. So in terms of what product we can get for that specification, the budget will also give you the indication as to this is the specification of product that we can get. You must have seen that for the same product there will be different versions, okay. If you buy a car, for instance, there can be various variants of that same model. So you buy a X model car, X car with model X, and in model X there will be five variants. So the base variant might be 5 lakhs and the highest variant will be 10 lakhs. So that's such a big variation. Similar for the other products that you might want to buy. So the budget will give you an indication of what is the specification of product that we probably can buy. And that would mean that you will have to put it down in your requisition and your purchase requisition. You will have to constitute a purchase committee, okay. We had seen that you are a member of the purchase committee, and so we will have to constitute a purchase committee. We will have to research the vendors. Now in certain cases organizations have vendor database, which means a list of vendors from whom to whom bids can be sent, which is the next portion, which is solicit bids. Now, for me, quotation, bids, proposal is the same. They all have the same meaning. They are only written differently. They may be mentioned differently. Bids, proposals, quotations, same thing. Okay, tender, all that means the same thing. You are asking somebody to make an offer. So when we'll see contract management, now you are saying, I need this. I have seen that this is a vendor who deals in it. And why do you need a vendor database? Because you will want to know whether that person is actually competent and capable to deliver that particular product or not. That is why we need vendors. We need to under identify the vendor. Suddenly what happens is I need this product. I don't know where it is available, and we start running in the market. So we will have to do some where when we, and that is not something that you will do tomorrow. You will do over a period of 2 to 3, 4, 5 years. But at the end of 5 years, you will have all these, the procedures established, all this database in a certain fashion, so that you are able to move to the next level as far as your organization is concerned. So then you have to solicit bids. Now, the method of procurement will decide how you will solicit bids. You will have to solicit bids. Okay, that's the process. But in this process, how you will solicit bids, the method of procurement will tell you. That is the distinction between procurement process and procurement methods. Okay, the procurement, all procurement methods will involve the bid solicitation as part of the process. So therefore, I said all the steps that you are seeing on the in the procurement process all have to be followed, but all will have difference or tweaking or change based on the procurement method that you will follow. Okay, so you might not have a procurement committee in certain cases, or you might just have the admin person doing it, but there is somebody who's constituting the procurement order. You may have soliciting of bids in different fashion based on the method. You will evaluate bid evaluation and vendor selection. So the evaluation may also be different for different methods, but there has to be a process of evaluation. That is what you will have to see. Now, you might have a situation where you will first evaluate the technical proposal of that person. Okay. So that bid evaluation process will say, one, I will do technical evaluation of the particular proposal that has come, and I will only take the financial proposal of those who have qualified in the technical evaluation. So there will be a marking, and I will say out of 100 marks, those who will qualify with 75 marks only will be taken to the next level in terms of opening their financial proposal. All those who have received less than 75 marks, they will be rejected at the technical evaluation stage. So that is the difference that will be there based on the methods of procurement as far as uh, mm, evaluation is concerned. So evaluation will also depend on the method of procurement, and your procurement policy will explain that. When it will talk about the method of procurement, it will say the procurement process will be like this. That is the rule, that is the procedure that we are talking about. Now, once you have done the evaluation, the procurement committee will finally select the vendor, and to the vendor we will give, the purchase order or a contract. Now, what's the difference between a purchase order and a contract? Basically, for standard items, we normally give a purchase order. That is a standard template of ours. And when we are talking of documentation and record keeping, we it's as part of the procurement policy. At the end of the procurement policy, you will find a lot of these templates, and the templates might also have the template of the purchase order, because then that purchase order template has to be followed uniformly by all the people, whether at any location, whether at head office or wherever, so that there is standardization in terms of the terms and conditions of the purchase, the format, what needs to be included, does GST need to be included, just is packing to be included, is transportation to be included. There is a standard template that all will have to follow. So if packing and transportation is not included, we will just say nil. GST is included, GST is mentioned there, and the product is from a GST vendor, then we will have to pay GST to that particular vendor, the goods and services tax. So what it will do is that the purchase order will ensure that all people who are making purchase orders understand the terms of the purchase similarly. Contracts is when there are specific deliverables that have to be, made by the vendor. So normally contracts will be done for works and for services. Okay. So if I want to buy a laptop, which is maybe HP Pavilion laptop, then the HP Pavilion laptop will have standard terms and conditions. It will have standard conditions in relation to GST. It will have standard conditions in terms of installation, in terms of packing, in terms of delivery, all that. Now, what will you do? Will you do a purchase order? Will you do a contract? You will do a purchase order because you have a standard template for making your purchase. But if you are doing something like a research study, then what will be your research design? How much research sample will be there? Okay. How much data collection will happen? How will the inferencing happen? How will the data be kept? What will be the outcome of that research work in terms of reports? Can you do that on a standard PO? May not be possible. So therefore, it is how will data be made available? How will travel happen? All that will be then decided in a contract. Therefore, while when we talk of contract management, it includes both PO and contract, because what is a contract? A contract is a binding relationship between two persons. Okay, a marriage is a contract. Okay, when we talk of a marriage, similarly a contract for an organization as a vendor is a binding arrangement that is there. I will do this, you will do this. That is the kind of contracting that we are talking about. But both PO and contract, uh, normally when we say contract agreement, okay, they all are within the fold of contract management. So that then contract has to happen, and the it has to be sent to the vendor. Then receipt and inspection. So the receipt of goods, that once they come, inspection means verification. Who does the verification? You will do the verification, and of course the invoice approval and payment. So the invoice of the vendor, once you are satisfied that the goods have been provided based on our specification, they will be approved and the payment will be made. Now, different, if you see in this particular procurement process, at each step, different people are involved. See, when it comes to precise technical specifications, it is you who is involved. When it comes to budget item monitoring, it is you and the admin person, because before the admin person is actually going to send out the bids, that person has to also see whether the budget is available. Constitution of the purchase committee is the admin person's job, but you are a part of the purchase committee. Okay, research of vendors is the responsibility of admin. But if there are complex procurements, then you may also be involved. Soliciting bids is entirely the responsibility of admin. Okay. Now, bid evaluation is a responsibility of the procurement committee, where you are also there with other people as finance people. Now, issue of purchase orders, contracts is the responsibility of admin, but based on your authorization structure, you will sign it off. So you are holding the purchase order.
You are the holder of the purchase order. Receipt is by admin, inspection is by you as program person. Okay. Invoice approval is by you and payment is by accounts. So you see the accounts department, the admin department, and you and your supervisors are all involved at different stages and have separately cut out roles and responsibilities as is being defined for that particular procurement method in the procurement policy. So who's guiding the procurement process? The procurement policy is guiding the procurement process. Now, if we want to just have a look at more in terms of individual steps in the procurement process, is the first is the purchase requisition. So who does the purchase requisition is something that I want to just show it to you on this table. Program coordinators or the concerned staff. If it is office supplies, then it will be the admin person because they are the responsible persons in office. But when it is program supplies, then it is you as programmer. Okay. uh, Now the purchase requisition must capture everything. Okay. Purpose, why we want to purchase, what is the quantity, what is the quality, what is the budget. Okay. When do we need it, that is the right time in the procurement. What is the budget available? Okay. So all that has to be specifically captured in that purchase requisition. That purchase requisition has to be made by you because you need the product and you will send it to admin department after getting the approval from your supervisor. So forwarding the purchase requisition after approval to the admin department. The admin department will call for bids, okay, or sometimes called RFP, request for proposal. It will depend on what words are being used in your procurement policy. So I'm generally talking generically. So the admin department is responsible for calling, and this is how the delegation and segregation of duties in procurement happens, and therefore there is arm's length relationship and transparency. Okay. So there is nothing like conflict of interest. You are not the person who's inviting the bid. You are only the person who's requiring it. Now, the admin person will do it either from vendors which are in the vendor database. Okay. Bids generally have to come in writing. Oral bids might also come based on smaller quantities. Okay. uh, through web search or that way. Sometimes you might have threshold where you just take oral quotations, and that is a procurement method without quotation. Procurement without quotation is a method. In that case, what will happen? You're not asking for quotation, but you are asking that person by making a call, what is it that you will ask require for this product. Now that is for very small kind of products. So then you will not follow the entire procurement process in terms of bidding, because that will, you have to make cost, if you have to have efficient procurement. So it will depend on what is the threshold, what is the value, and what is the method that you have selected. You have to understand the concepts of open bid where everybody can see the bid, closed or sealed bid where people only the procurement committee can see the bid. What is public bidding? Okay. We will see all that. Public bidding means that you are not asking the bid from only selected bidders, but you are asking it from public at large. Two-stage bidding, I'll just tell you after a while when we will do the methods of bidding. So the methods of bidding will tell you the way in which the bids will be received in the previous step. Calling bids and receiving the bids will depend on the method. Okay. Now, once the bids have come, you will evaluate the bid. Who evaluates the bid? The procurement committee. Generally, a lowest one is considered if it is a standard product. But if it is not a standard product or service, then we might have other methods of procurement. Okay. So you might have negotiation if there is that is allowed in your procurement policy with the vendor and get his final offer, that after discussion and negotiation, this is our final offer and the final vendor selection. Okay. And the terms of purchase are more or less finalized. Now, who does this? This is the purchase committee who does it. Okay. So all the decisions and discussions with vendor within the procurement committee has to be documented. I had said record keeping of the procurement process. Very important, because at that particular day when we made that procurement, this was the thought process. That should be documented in the minutes of the meeting of the procurement committee where you are finalizing the vendor. Issue of purchase order, Generally, the purchase order is approved by a program person but it is issued by the admin department. Okay, appropriate authority as per authorization matrix. Now, it is likely that you might be the appropriate authority in the authorization matrix, so you will have to sign. This is contract management. This is contract management. Now, PAO, a purchase order or a contract containing all the relevant terms and conditions. Okay, this should be duly acknowledged by the vendor. Then only it will become a contract. If you have issued it, you have given a counter offer. But once it is agreed, then it becomes a contract. So till the time the vendor has not agreed to it by signing it, by acknowledging it, then it is still not a contract. So one has to understand when does contractual obligations start. Okay. Uh, so for small procurement, so this will be a purchase order or a contract, and I told you when purchase orders are used and when contracts are used. For small purchases which you have only asked verbal quotations, you can also give a email kind of confirmation of the order and it is acknowledged, that is all right. Okay. Where you do web search and you order a purchase on from Amazon or from any other website, then probably there will only be a purchase order that you will raise, and the site will only acknowledge that, well, an order has been placed. That is good enough in terms of documenting that a purchase order has been placed. Then the receipt of goods and services. Again, very important, because here, while the receipt is by the admin department, the verification that it is as per terms and conditions of our requirement is by the programmer. Okay. So the user or the program person has to specify the quality. Quantity is okay. The admin person can also check. We are ordered for 500. Are 500 come or not? But those 500 are as per our technical specification in terms of quality. Because the price you have paid for that quality, if you get inferior quality, then you are cheated. So then you have to be very clear, whatever was my specification at the time of purchase, I have got identical goods based on my technical specification. That is something that has to be ensured by the user. But all the stock register, if it's fixed asset, then fixed asset register. If it is inventory, program inventory, then the stock register of inventory, all that will be done by admin. The receipt of material will be done by admin, but they will, once the invoice has come, the admin department will give it to you and say, well, please verify that the product has come on the invoice, that the product has come as per the specification. Now, once that you have signed as per specification, you are taking full responsibility of the product from there, that particular point of time. One, the admin department will only issue it, record it. They are only custodians of the particular products and services. But who is the end owner of that product and services in terms of satisfying the beneficiaries or satisfying for whomsoever you are purchasing? It's you. Okay. So that is something, as a user or verifier, it's your big responsibility. And the admin department will also be responsible for issue. So payment, now comes the next step, which is the last step of payment and issue. Payment means the accounts. So once the invoice has been recorded in the record register, has been verified by you, then the admin person will send it for payment to the accounts department. And that accounts department will pay based on your verification and by the verification of the admin department that we have received the goods. Now, this is the stage at which the accounts department is coming into the picture. The accounts department might be in the picture at the budget verification stage, at the purchase committee stage, but after that they are not there. Somewhere they are there, somewhere they are not there, because we have to identify who's responsible for that particular step, and that brings about segregation of duties, that brings about transparency and accountability. Okay, that brings about delegation. Once the products have come, then they will be issued to you, and the receipts may be obtained by the admin department for whatever has been issued to you. Now, consultancy contracts, as I had already said, consultancy arrangements or service contracts, they will be basically in the form of a contract, because they are not standard services. All services might be different. So a formal contract is entered into. Okay, documenting various terms and conditions. What are the deliverables? Okay, uh, what is the timeline for the deliverable? So you will do the research study, by you will submit the research design or the research sample by this date. You will do the training by this date of of the enumerators. You will do the you will collect data from this based on the sample within this time. Then you will submit the, you will do the the findings. You will share the findings, and so at each the deliverables will be said, and by which date it has to be paid, delivered will also be decided. The payment can be based on deliverable, again in a consulting contract, and deduction for taxes. So basically the tax deduction at source as per the income tax law. Now, uh, also please remember that these are for general products, services that we have to buy under a grant contract. Sometimes we have to buy normal office supplies, or hygiene supplies, or things that will continuously come to us every year. For that, what can happen is you can have an annual rate contract. Suppose you want to have uh, some kind of standard printing to be done, so you can have an annual rate contract with the printer. You want to buy stationery items, various stationery items, you can do an annual rate contract. So the annual rate contract, and similarly you can do the annual maintenance contract for various items in your office. So the annual maintenance contract and the annual rate contracts are basically for a period of 1 year. That is based on competitive bidding. We have shortlisted this particular vendor or one or two vendors based on work that you have, and those will be the one vendors to whom the work relating to annual rate contract items or annual maintenance contract goods will be given, and no procurement will not be repeated. So that is saving time, okay, and getting the best value, because then that particular person will give you the lowest cost, knowing what is the volume of work that is there. And rather than going to the market every time and asking for quotations, you will get more quotations. So for instance, if your requirement for uh, you know uh, uh, paper ream is 100 in a year, then you can say my requirement will be 100, but I will take 10. Right time also we have to ensure. So we will take 10. But this person, the vendor knows that they will purchase 100. So they will give quotation based on that, and also give you some kind of a bit hedging against price increases that will happen in 12 months. So that is the good thing that you can also do for standard usable items that will be required throughout the year. Now comes to the procurement method. So we have seen the procurement steps or the procurement cycle. Now we have to see, for different kinds of products with different thresholds or different complexities, what is the method that we have to see. Now it is not necessary that you have all the procurement methods in your procurement policy, but as you will grow and your operations become complex, they can be included. The first one is, yeah, and this threshold in procurement is actually a, major role, it plays a major role in how the selection process will be done. Okay, and the threshold, that is the money value. When I'm saying threshold, it means how much is the value of the estimated cost of that particular item. That will decide what kind of a procurement method will be there. So if the value is low, we will keep the method simple. If the value is very high, uh, then and complex, then our procurement method might be more elaborate. Okay, that is what is the thumb rule. So the first one is procurement without quotation. So this is also sometimes called over the counter. Just as you go to the a shop and over the counter you purchase, similar is the case with based with without obtaining a quotation, you go to the market. So you can go to the market and ask the vendor, three vendors in the market, and record that this is for small value items. For very small value items, generally this is the project, and the what I have seen is that the procurements which are of the in the range of 10,000 to 25,000, again depending on the size of the organization, they will fall in this procurement method of without quotation. Without quotation means that I will not ask you to quote. This is only based on uh, you know verbal
uh, uh, understanding of what the cost will be, and that will be recorded on a piece of paper, and that comparison will be just preserved, and based on that the order will be placed.
So we are not asking the vendors to give us any formal quotation or bids. The second procurement method is through RFQ. Uh, so when we say RFQ, it is request for quotation. So for goods, we ask for quotation. For consulting services, we ask for proposal. That is the distinction between RFQ and RFP. Okay. Uh, to limited vendors. Okay. This is a closed or limited or restricted tendering. So closed bidding, because we have asked only select vendors, and where did we get those vendors? From our vendor database. But these are limited vendors. We have not asked the entire city to where hundreds of vendors of that product might be there to give, because again, you cannot ask hundreds of them. Procurement has to be efficient. So limited number of vendors have been asked to provide quotation, but this is against a quotation. Okay. Uh, Now it might be from the pre-selected list in your vendor database. When we call it vendor diversity, we say that you have vendor database. Okay. Uh, Now, this threshold will depend on different from different organization, but generally I have seen that from 25,000 rupees up to 25,000 no quotation, 25,000 to 1 lakh, sometimes 2 lakhs, you might have, you might ask only the vendors in your vendor database by way of limited or restricted tendering to quotation, to provide quotation. So for instance, a particular item, there might be 5 people in the vendor database, and the procurement method might say, please ask for quotation from 4 vendors. You may select all the 5 vendors and ask for that quotation. And that is the limited competition that we are allowing for this particular product. Now you will notice that the competition is a function of the threshold. The less the threshold, less the competition, more the threshold of procurement, more the competition. Okay, and the more the complex the procurement method. Now, this is through request for quotation or request for proposal. Then the next one is open bidding, where you are asking everybody who's eligible to quote to, because the value of that procurement is very high. It's sometimes called public bidding. It's sometimes called advertised bidding. If you advertise it on your site or in your in some newspaper or in some portals which are available for vendors to know that you have an RFQ or RFP which is out in public for quotation. So this is something called open bidding versus the closed bidding that we have seen, or restricted bidding. Now this is basically for inviting vendors from public at large. Okay. So the value of such procurement is large, and therefore we want better price discovery, and we want to get more vendors to offer. The procurement process will be lengthy. The procurement process will take more time. The procurement process will be complex in this procurement method. So please remember, the procurement method and the procurement process are related to each other, and the procurement process will be altered based on the procurement method. Quality and cost-based selection. Now, this is also sometimes called as QCBS or two-stage bidding. Now, what is quality cost-based procurement? Where we have to be mindful of the quality as well as the cost. So we are giving weightage to both quality and cost. So we might give weightage of 60% to quality and 40% to cost, because for us, both are important. The quality of the services or the quality of that particular, product which is being customized for you is also important. So this is a very normal method of procurement, where the services have to be procured or goods have to be procured which are technically customized goods, not standardized goods. Now, why we call it two stage? Because here we first will understand the quality of the proposal. Is the proposal addressing our need in terms of the technical quality? If it addresses and we have a rating mechanism, then we will take it to the financial stage and we will provide the weights to the financial and technical proposal and come up with the overall decision on who is the lowest responsive bidder. Okay. So if that particular vendor is not, fulfilling the technical score that is required for that bid, then that particular vendor will be rejected or dropped at that stage and not taken to the next stage in the two-stage bidding. But those who have, kind of been, uh, mm, have made, crossed that threshold that has been laid down at the time when you are doing this public QCBS. So the QCBS is also generally done through public bidding, where the bid documents will say this is the threshold. So my technical scores is 60%, 60 marks out of 100, and cost is 40. Out of 60 marks, the person should qualify and get 75% of 60. Okay, which means that the person should score in the technical evaluation 45 and above. Only then we will take. If somebody gets 40, then their financial bid will also not be opened. That is why it is called two-stage bidding. Very important to understand that. Then the or electronic or online procurement is, here when we are talking of the public bidding or advertisement bidding or tendering, we were asking them to send their quotation to our office. Okay. But in or electronic or online bidding is when we say, well, you will have to send the bid in a particular mailbox or a specific mail ID, and that mail ID will be the online method of procurement. So they don't have to send it to your office, but they have to send the quotation to to that particular mailbox. And once the bid period is over, the mailbox will be deactivated, and from the mailbox, whatever are the mails that are there will be shared with the procurement committee. So and again, it will depend on the kind of method. It's a two-stage procurement method. Then with the technical procurement committee or the technical committee of the procurement committee, we will only share the technical bids for their evaluation, because once they have done the technical evaluation of those bids, then only those candidates which have crossed the technical threshold, we will take them to the financial bid and share the financial bid only of those vendors who have qualified in the technical evaluation. So remember, that's how it is. So e-procurement and online procurement also ensures that everything is digital. You don't see the vendor. You don't have to need to see the vendor. Okay, so you create that email box, and you can, in your terms of the public tendering that you will do, say that please send your procurement or any query to this mail ID, and procurement documents or your bidding documents to this particular mailbox. Fixed budget procurement, there is a fixed ceiling. Okay, beyond that, this particular product we want to buy, but we will not buy it for more than X amount. So suppose you want to buy a computer which is a particular specification, and you say that, and that procurement computer might be from 60,000 to 65,000. You can say, I will buy this particular product for 62,000. Now this 62,000 is my budget. Whosoever is interested in giving us at 62,000 should only apply and provide their quotation. 62,000 or less. Okay, not more than 62,000, because we have a fixed budget for this particular procurement. That's also possible. Least cost procurement means that for this product, whosoever, for us, the qualifying idea is to have least cost. Whosoever will give the least cost for this product, generally the L1, but we will say that we will only consider the least cost. So generally very standard and low value items, for that we do the LCS, sometimes called the LCS, or the least cost method of procurement or selection. Okay, so these are generally for standard goods, because for non-standard goods and non-standard services are generally non-standard. These procurement methods might not be there. We will have to look at quality and cost both, and therefore the quality and cost based selection method. Now there can be more methods of selection, I'm saying, but these are some of the more regular methods of selection that you will find in procurement policies. Will you look at all these methods, depending upon the size of your organization, the kind of projects that you get, you may include these various methods of procurement. Now, coming to the another method of procurement which is not competitive is what is called as single tender inquiry or single sourcing. Single sourcing, as the word says, it means that you have only one source or you have selected from only one source. So there is no competition. Okay. So when you do single source procurement, you are not doing any competition. When do you do single source procurement? We do single source procurement only when there is one source. Okay. So for instance, if we want to buy a particular software, we want to buy a quick heal, we want to buy an outlook, then that is the only particular one standard vendor is there. Where do you get quotations from for other vendors? So when proprietary items where the vendor has kind of control over the product and there are no competitors, or it's a case of monopoly, when only one is in such a situation, one vendor is there, only one source is there. If there is an emergency where you will not be able to do competitive bidding but you have to provide for that emergency immediately, then you also may do single source procurement. There are competitors, but because of emergency you are not able to get, you are saying this is the only one person which will be able to deliver. uh, Continuation of previous work. So for instance, I have a software that I designed and now I want to add more modules to that software. So that is what is continuation of previous work. Okay. There will I then go to a new vendor, or when I go to for competition? No, it will not be possible because that particular vendor has already done that software for us. Now we want to add more modules to the software, that will also be through single source. So a single source justification note will have to be approved, prepared and approved. Now, please remember, single source procurement does not allow for competition. So this is the big disadvantage. But when does it happen is something that your procurement policy will also say. Okay. Now, exception to policy is different from sole source. Exception to policy is when, because of certain requirements, whatever policy you have kind of decided, whatever is the policy that you have decided, you want to make an exception. You don't want to follow that particular policy. There is a deviation that you are seeing, okay, from the prescribed. So you might have a procurement policy where you have quality and cost based selection. But in quality and cost based selection, if for instance you said 75% on the technical scores, if none of them got 75%, will you make a deviation from the policy and say I will accept 60%? Okay, that is what is the deviation from the policy. You are deviating from the policy mandate. Okay. That might be justifiable reasons, that probably even if we go in for another quality cost based selection, we might not get better vendors for that. In that case, you might have to make a deviation. Maybe in an emergency also you might have to do it. Whatever is available, let's go. We might not be able to follow the method of procurement. Lack of competitive options, all these are situations that might require deviation from policy, and all these deviations have to be recorded. So while we followed the method of procurement, while we followed the method of normal procurement, we followed the method of normal procurement. From that normal procurement method, we made a change. That is what is called exception from policy. It's different from sole source. So sole source is a method of procurement, whereas exception to policy is an exception from the desired or the prescribed methods where you make a deviation. Okay. Now, vendor database is the uh, thing that I talked about in terms of suppliers. So it's very important to have to over a period of time create a supplier database. Now, why this supplier database will be also checked in terms of whether they are the right vendors or not. Are they existing? They have the registrations? So this is maintained by the admin department because they have to send the bids for solicitation. But as a non-finance person, you must see that the admin department is sending these and is having enough vendors to get better product and better price discovery. That is what something that you have to do. Okay. uh, so what normally good organization do is they have the vendor database and they keep on building on that vendor database, and they keep scrutinizing the existing vendors. So the existing vendors might have a problem, so they can be dropped also. Uh, Now this documentation of what we call as vendor database is to be prepared and kept by the admin department. Okay. Uh, Now only when we are doing closed bidding, then whosoever is the accredited screened or accredited vendors, they will only be included. Uh, and when you have these vendors in the vendor database, you are also ensuring that there is arm's length relationship. You at least are know these vendors, that there is their data is validated. Somebody is screening them. Somebody is trying to do that. So there is transparency and independence and fairness. So it is very important to have vendor database. Now, uh, maintaining audit trail is nothing but documentation. So whatever procurement you did at that particular point of time, if there was an exception or deviation, why was that done? Is what you will have to record in that particular document, and that will be available as an audit trail. Trail means that that is available as a connecting point to the procurement as on that date. Today, that situation might not be there, and therefore you might ask, why was this deviation given? Why was this decision taken? Why was the purchase committee decided on this particular vendor and not that particular vendor? All that should be maintained in the procurement committee minutes, so that there is audit trail for that particular procurement, which can be referred and validated subsequently when there is an audit of your procurement. Now we come to contract management, which is the next part. Okay, why contract management? Now, please remember, the contract part is that part in the procurement process where we were talking of issue of PO and contract. So, contract management is that piece in the procurement process. Please remember that. But why we are talking of that contract management is to underline the importance of a contract. Okay, and therefore we are calling it contract management. Again, contract management is begins from the time when the contract has been made and ends at the time when the payment is made. So in the procurement process, the contract management in the procurement management starts from the time when the contract has been made to the time when the product has been supplied, to the time that the user verifies and the payment has been made. That is why the contract management is called as a management. It's also fairly inclusive of many steps. It's not just a contract. So you are signing so many agreements, contracts, POs, because you have that authorization limit. Now you are the program director, so all contracts which are above 5 lakhs have to be signed by you. Are they signed by you? Yes, they are signed by you, because you have the authorization in the authorization metrics, and the authorization in the authorization or in the authorization metrics is mentioned in the procurement policy. Now you might be always wondering why we have to sign. We have selected this fellow, ask him to supply, and make the payment. And why? What is all this contract management business? Why should we do it and waste time? And many times you must have seen that if you have not been very particular about the terms of the contract, then you might get goods or services, or you might get things which are not as per what was, what you had wanted. So either it will be suboptimal procurement, or there will be a loss, and you will not be able to go to the vendor and say, well, you said you have provided me with inferior product, because the contract management process was not properly done in your organization. That is what is the big thing that you have to understand about contract management. And therefore your role, this contract management is precisely your role, because whoever is putting the final signature on the purchase order or on the contract as the authorized person, as the authorized person is the person responsible. So remember, for us, contract management is not a piece of paper. Contract management is a very important part of our work. And we should not just question it and say, well, why contract management? Now, what's a contract? Now, please remember what's a contract. Contract is legally binding agreement between two or more parties. There could be more than two parties also. Okay, there could be three parties also. That creates an obligation to perform or not to perform. So we will perform this, we will not perform this. So if there is a contract, you also know that this is not something that you had to do. Very important to know this. Otherwise, the vendor can say, well, we understood that we thought that this performance has to be done by you. No, it was not supposed to be done. Then there's a big fight. So what is a contract? It is not a piece of paper. It is an obligation which can be taken legally to courts. And this agreement has to be, respected by both the parties or the three parties or the four parties. Okay. Uh, who have to each perform. So there could be three parties, which each of these parties will perform something. You may be the buyer, somebody else might be the supplier, and the third person might be the installer. All of them will be there in that same contract. So I was supposed to install, and what is the meaning of installation is also part of the same contract. That is why you might have more than three people. But the big thing is, this is a legally binding agreement for performance or non-performance. This is what is a contract. Okay. What does it offer? What does it include? Okay. uh, it includes an offer. Okay. uh, an acceptance of the offer. So who's making an offer? The vendor is making an offer. You decide. So you wanted a computer, and you gave the specifications, and somebody made an offer. A vendor made an offer. What is that offer? It is a proposal. It is a promise. Okay. It is not a promise. It's an offer. It's an offer that I will give you this. Now, based on that offer that person gave against your specification, when you accept it, you are the person, you are accepting it, by the other party. Okay. And there is a consideration that is involved. Consideration means I will make you payment against this particular product. So the offer has been made at a particular price, and for a contract there has to be a payment or a price. That is what is called as consideration, and that offer has been accepted. Okay. uh, with consideration is usually in writing. Then that becomes a contract. This is how it looks like. Contracts are agreements which are legally enforceable. Enforceable means there is a promise and there is a consideration. How does a promise happen? I have made an offer again for computer. You have accepted the offer for my offer, and now there is a promise between the two of us. There is a promise. So there is an offer against by a vendor against your requirement. Acceptance has been done of that offer by you. So it becomes a promise for both the by the person who has accepted that, well, I now promise to buy this item from you, and at what price. That is what is called as consideration, and this becomes a legally binding agreement. That's what is a contract. Okay, please remember, this is how it flows. So if I had not accepted it and this person had made an offer, will it be a promise? No, even though that offer had a consideration. So all these elements have to be available to be able to make a contract. Contracts ensures parties are legal. So in contracts also, please understand that parties are capable of contracting. I mean, you are authorized to contract. ऐसा नहीं है कि आपका clerk ने your clerk just makes a purchase order and that purchase order is binding. No, the authorized person has to make that contract or purchase order. Only then it will become binding, because you are legally capable of that contract. There has to be a consideration. No consideration. There has to be a rights and responsibilities. Uh, Please remember that there is an offer against our requirement. So, सबसे पहले to begin with, there has to be a requirement. At the beginning, at the outset, there has to be a requirement, technical specification, kind of product, and against that time of product, when you solicited bid, somebody made an offer. And against that offer, you have accepted that offer, you have selected the vendor, and that becomes a promise on your part for being able for purchasing this item at this price. And when it is put down, when that agreement is put down on paper and is legally enforceable, that is what is called as a contract. Okay, got it? People should be capable of contracting. They must understand the terms and conditions of their responsibility. This is what is called as mutuality. Okay, and legality. Legality means that this is now legally enforceable. That is what is legality. The mutuality is this is what we are, this is what our terms and conditions, this is our promise. My promise is, my offer is my promise, my acceptance and my payment is my promise, and to pay this. So that is what is called as mutuality in a contract. Moving on, contract management. Again, procurement management we had seen. Contract management is part of procurement. Please remember, is the process of administering the contract with the vendors, okay, through the life cycle of that procurement. And it begins from creation of the contract to final termination or renewal or completion. So the contract begins from creation of an obligation to completion of that contract. You might renew that contract, you may terminate that contract. All those are parts of the contract management. So you have a promise, but you are terminating that contract because of certain conditions which are also included as part of contract. So will the contract be get completed? No, it will not get completed. But there is a termination clause in the contract which will help both the parties to terminate the contract. Otherwise, they cannot terminate. So termination, if I want to repeat this contract, I want to renew it, and the first important thing is creation to completion of that particular contract is the crux. Then the termination and the renewal. Uh, Both parties, okay, fulfill their respective contractual obligations is what the contract management is done. So it mitigates risks for both and maximizes the value for the procurement. How does it mitigate risk? Because the supplier knows I have to do this much, and you as an organization know this is your obligation. You cannot go beyond that. So that is a basically managing your risk in that procurement. Now, what are the normal clauses of a contract? Normal clauses are two parties who are legally capable of contracting. Who are the persons who are signing it? What is the date of that contract? Because the effectiveness of the contract will be based on the date on which the contract has been, I mean, the date of the contract. Sometimes the date of the execution might be different, but the date of contract means that this legal obligation has been formalized on this date. That is what I'm saying. The commencement date of the contract can be different from the execution date. Okay, it can be a subsequent date also, but we are now bound by this contract is what the date says. The period of contract is something can be different from the date of execution. That is what I'm saying. Renewal, can this contract be renewed? Can this contract be extended? Scope of the work, okay, what are the deliverables? Very precisely they will be there. Okay, now what will be the price? That is the consideration. What is the escalation? Now, when we are talking of the contract, the PO is also like a contract. So several of these things will be there in the PO, standard ones. In a normal contract, this is the chronological way in which it will be stated. What will be the price? Will during the period of the contract, there will be an escalation. Other terms and conditions means what about transportation? What about insurance? What about any marketing expenses? What is the payment clause? If there is an escalation, then what will be the escalation in the payment in terms of payment? Period for completing delivery, warranty clause if you are purchasing a product which has warranty, What will be the termination clause in case we have to terminate because of anything which is outside our control or any default that happens by any of the parties? What is non-compete? Non-compete means that you will not compete with any other particular person. Okay. So this is a clause which is mostly done for procurement where the kind of product is more important. Then confidentiality, limitation on liability. This is a risk management tool because contract says my liability is limited to this. Subcontracting, which means will you delegate this contract to somebody else for fulfillment? Indemnification, you are not this is indemnification, meaning that you are indemnifying the other person from any particular liability not arising because of that particular person. Force majeure, certain acts of god where you might have to terminate. Amendment, how will it happen? So we had seen several of these provisions in the grant contract. Similarly, we are seeing the same thing in a purchase contract. Dispute resolution, what will be the mechanism? Arbitration, or will it go to court? What will be the governing laws? Which state laws will, whose geographical laws will be the laws that will be there? Place, date, signature, and witness. Okay, so these are some of the clauses in an agreement that you'll have to look at. Now, what are the aspects that you need to look at? Okay, normally contracts should be in writing, okay, and should be complete, meaning that all the clauses in the contract should be there. You should know your rights and duties, ensure that there are no violation of any laws, seek professional help if you want to get kind of clarified on any of the provision, avoid vagueness. So the contract terms and conditions should be very, very precise. Read, understand each and every clause of the contract. Remember that once you sign the contract, it becomes legally enforceable. Legally enforceable means that you cannot get out of it, but you will have to comply with it. So therefore, all these things are something that are practical aspects that you must consider when you are making contracts. I go next to the financial asset management, fixed asset management, and inventory management. So we have done contract management. And I want to only restate that contracts are very important because they create a liability on you, which is legally enforceable. Okay, so that is something that you have to understand. As far as fixed assets are concerned, so we had seen that we have purchased goods, and uh, among goods, there are two types of goods that are classified. One is capital goods, and second is goods which are revenue or expenses. Revenue goods or inventory or consumables. So, or we can say two types of goods that we buy: non-consumable and consumable, meaning that you cannot consume it in one day. Second one is you can consume it. So, fixed assets or capital assets are something that you will not be able to consume in a single day. That is the distinction between fixed assets and other supply. What is a fixed asset? Any asset which has a life more than 1 year. That's how the legal definition is. Anything which is worth more than 5,000 rupees, it's not consumable. Okay, so what are the fixed assets? Normally, the categories of fixed assets: IT equipment, furniture, fixture, office equipment, fixtures, any land that you might buy, any building, they are all fixed assets. I didn't mention that because generally we do not have lands and buildings. We do have lands and buildings. That is also part of fixed assets. But we have a lot of assets which we purchase, which are IT related, which are related to our day-to-day work, our furniture, our fixtures, our fans, our partitions, all those things, our equipment in pantry, our equipment in the kitchen, our refrigerator, our oven, all those things are things that we buy. Those are all fixed assets because we are not consuming them in uh, when once we purchase. Now, what are the points that we need to keep in mind when we are dealing with fixed assets? Okay. Uh, First of all, very simple that you have to follow the procurement procedure for that particular fixed asset. Uh, Then you have to record that asset. Okay. Even if you get any asset in kind, you will have to record it. So somebody might give you an asset in kind and they'll say, well, I want to just donate my refrigerator to you. You will have to include it in your fixed asset register. And you might have to, record it in your register and give a code to that. Because why do you need a code? Because that code will, you know, uh, uh, be referred to for that particular asset because that asset is not getting consumed. Then uh, recording the asset and record an asset register. So the fixed asset register is the asset record. Then the issue and return of assets. So if you have a laptop, for instance, then you will issue it to your staff. So there will be an issue and there will be a receipt. And once that person has used that asset, they will return it. For instance, you have a projector. So you might want to take it for training. The admin person will issue it, you will use it, and you will return it after the training session is over. That is how the issue that record keeping is done of the use of that asset. One is the record keeping of the asset, the second is the record keeping of the asset. Physical verification, basically, since the item is not consumed, therefore you will have to periodically, annual inventory is what I have written. So at least once in a year, please check whether it is physically available there or not, and do a verification report. Depreciation of the asset means that every year the asset will depreciate or reduce in value. So an asset that I purchased for 60,000 as a laptop will actually not be 60,000 next year. So I must represent that value correctly in my account books. It will be 15% less value. So I will reduce that value from 60,000 by 15%, means 9,000 rupees I will show as depreciation. That value is not no longer available. And that will be part of my expense because that is a cost that I have there, that is there for that particular asset. So that's what is called as depreciation. Depreciation means loss in value of that asset, which I have to recognize so that I do not overstate the asset in terms of value after 3 years, 2 years, 5 years. Now, if I had not done depreciation and that 60,000 asset I am carrying after 5 years, it is useless, then the 60,000 rupees as a value of the asset in my books in the fifth year is not truly representing the value of the asset. So I have to account for uh, that diminishing value of that asset by way of providing for depreciation. That is what you have to understand. Now, this depreciation is something that is done by accounts people. And this depreciation, why? Because it gives the real value of the asset. So at some point of time, you might have to sell that asset because it's no longer usable. So at least that might not, now depreciated value is just 11,000 rupees. So if somebody comes and says, I'll pay you 12,000 or 11,000 rupees, then that is the right price at which he is buying that product. Disposal of assets, that is what I'm saying. After the useful life, loss of asset, if you have lost it because of some negligence or because of any specific reason. Insurance of fixed assets because of loss. Role of admin in fixed asset management. Okay, so basically the admin people are responsible for the fixed asset, but you are also there. Issue of fixed asset, return of fixed asset, okay, loss of fixed asset, all those are situation where you might be there actually. So please understand these are some of the aspects of fixed assets. I come to inventory management. So what is inventory management? Basically, from your point of view, the promotional material, okay, which is generally the IEC material, the communications material, the education material, okay, uh, consumable. So they can be drugs, they can be consumable, they can be drug kits or diagnostic kits. All of them are all inventory because they'll all get consumed. Yeah, will communication material be consumed? Yes, because once you give that brochure or pamphlet or something, then that particular item will get consumed. It will not be, cannot be reused generally. Okay, that is why the distinction between inventory and fixed asset. Stationery distributed as part of a project. So, you know, uh, for a training session, the a notebook on pen, program goods that are distributed. Okay, those are distributed to the beneficiaries. Okay, that is what is the distinction between program goods and other goods. Stationery may be distributed for office use also. IEC material is distributed to beneficiaries. Program goods are basically goods which will promote the program activities. Okay, directly. Gifts distributed during trainings. So some kind of token items that you might want to give to the beneficiaries or to people who are attending the training sessions is all inventory. Now, what are the provisions that we have to, procedure that we have to, as non-finance people also understand? Uh, Again, inventory has to be as per procurement process. Receipt recording and issue of inventory is with the admin department. Please remember, inventory, since it cannot be used, you have to be very careful in terms of purchase of inventory only to the extent of right quantity, right time, and right place. Okay. So the admin person is not responsible for that. They will receive any, so you needed 1000 brochures, but you have printed 10,000 brochures, and that is not being used. After 1 year, the project is over. That 9,000 brochure has to be sold as scrap or waste. Okay, other rather than that, you could have got two types of brochures printed, and the beneficiaries would have benefited. Your program would have benefited. That is what I'm saying. So the receipt recording and issue of inventory is done by the admin person. That person is not bothered how much will be consumed, storage space, uh, and security. So because again, inventory requires separate storage space which should be secured. Return and recording of unutilized inventory. So you took some medicines, but those medicines were not consumed. You are returning them as programmers. So you must get a receipt for the return that you have done. Physical inventory, just like assets, you have to do inventory count on a periodical basis to see there is no kind of loss. Disposal of inventory which is no longer usable, okay, just like assets. And the role of admin department is there in inventory, but you are there at different points of time. One, in terms of procurement. Second, in terms of receipt of those goods for distribution, return of those goods which are unutilized, verifying whether that particular inventory item is no longer usable. Okay, physical inventory also you may be there. So all those things are to be considered when you are looking at it. Now, when we look at the finance policy of an organization, we will see the procurement policy or procurement management. We might sometimes see in procurement management only fixed asset management and inventory management. Sometimes we will see fixed asset management and inventory management as separate sections in the finance policy. That is what I just wanted to say. So it will all depend, but procurement policy will definitely be a part of the finance policy. Sometimes they are different from the made different from the finance policy. Our suggestion is that they should be part of the finance policy, because that is a financial issue which should be best covered as as within the finance policy and not as standalone. With that, I come to the end of my presentation. uh, so we have about 10 minutes. It's 12:50. uh, I now leave the floor open to questions. And maybe Indranil can now anchor it. If there are any questions, let me just go first to the questions, okay? Uh, Before we do. Do we need to get more than one bid to our proposal for program management of a construction of new premises for an NGO? So I want to only say this, Sujata, that if you have construction of new premises, say it costs 50 lakh rupees. Now you will have to go to your procurement policy and see what should be the method of procurement for an item of 50 lakhs. Now the procurement method will say open bidding. You have invited open bids, and it might also say that you must have at least 5 bids for competitive price discovery. If you do not get 5 bids, then you may want to redo the process. Or if you have limited tenders and you have uh, uh, 5 vendors in your vendor database, you have sent them. and you need to get three, but you're not getting, then please try to uh, 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 you know go in for more vendors than what is mentioned in your vendor database. Now, for instance, if for 50 lakhs, the procurement process was you have to do open bidding. And open bidding, either you have not advertised it properly or you have not contacted vendors who might be interested and tell them that where you are interested. One bid does not afford competitive bidding. However, if the value of the procurement was 20,000 rupees, okay, but this is not the case because a new promises cannot be done for 20,000. There, one bid or quotation might be over. So the materiality of a particular procurement will complicate the procurement method. And if you are not able to get competition, then it will be better not to to redo the procurement rather than just depend on that one quotation, because then it does not have transparency. It might also not have arm's length or a relationship. It might be at a much higher cost than the budget, or even if it is at the cost which is at the budget, then you must look at for more competition to get better quotations. Second thing is, do donated items also get into inventory list? So when there are two types of donations, one is donations which will be in the nature of inventory, and second is donations which will be in the nature of fixed assets. Our suggestion is that where you get inventory, which are consumables, which is more or less possible, it is always good to have a separate record of donated consumables and receive and issue them through that register. So you will have two registers. One is your own inventory, which you have purchased, and second is inventory which has been received in kind. It will be good to have that register, although you will not record it in your account books. In case of fixed assets, you will have to account for them in your account books because they will not be consumed. Uh, Not in good shape, then you will have to decide whether you have to include it in inventory or just remove it as scrap. As long as they are of some value and will be offered to the community, uh, I suggest you should include it in the in-kind record rather than not have any record. The in-kind record will not go in your account books. The in-kind record for fixed assets will go in your record. How to do the market evaluation for work services who are offering similar kind of services with different costs? Quality and cost based selection might be the best way of doing it. See what is the quality of proposal. Okay, the different costs might be because of the quality. So if you have given quality, you have evaluated quality and given proper marking, then the weight for that quality will also for that particular quality will help in giving you the final value for selection. Sometimes we have seen that if you have done quality and cost based selection and somebody's proposal is very good in terms of quality and that particular person's cost is also high, that person still is the lowest bidder because on the quality and cost parameter, combined parameter, weighted average parameter, that particular vendor is the best. And we should look at that, because if the product or service is like that, then we should give proper weightage to quality and cost, not just cost. But when it is a standard item, like a computer, for instance, then I think the cost should be what should drive. Is there any rule that any item above rupees should be considered as fixed assets and uh, capitalized? That is what the definition of uh, fixed asset is. Now, some fixed assets in the nature of software might have different thresholds, but generally assets which are above rupee items which have economic life and are valued 5,000 are considered as fixed assets and capitalized. Generally, for what purchase amount a quotation is required and many questions and how many quotations. Now, that will depend in your procurement method and your procurement policy. Okay. I said quotation not required. Small value item, no quotation required. Beyond a threshold, quotation required. Beyond a threshold, how many quotations required, how many vendors to send, that you decide. Beyond a higher threshold, then you might have to even go in for open bidding. Okay, and how many bidders? What content we can go with MOU for NGO? Is it fine to have any So there is a difference between, please remember that MOU and contract are different things. MOU is an agreement which does not have financial implication. It is a non-financial agreement. A contract, because there is a the agreement, because that has a component of consideration, is a contract. So first of all, understand agreement and MOU are two different things. Now when you go in for uh, an arrangement with an NGO, it will be better to get into a sub grant, okay, rather than do either an MOU, because there will be money involved, so you can't do an MOU. Don't do a contract because it will come within the definition of services. So if you want to give any particular part of your activity or your project to another NGO, please do a subcontract. I have explained that difference. If we are doing contract of employee in NGO, whether the employee can get all the facility as doing con if we are doing contract of employee, this is an HR. I don't understand. So if I understand correctly, if we are doing a employment contract, all the social security benefits that are available based on the threshold, if it has been crossed by an NGO, then that social security benefit will be there. So for instance, if the NGO has more than 20 employees, then the EPF will come in. If it has more than 10 employees, the gratuity provision will come in. If it is covered within the ESI fold, if it is covered under maternity benefit, again 10, more than 10 employees, then maternity benefit is available. If it is more than 10 employees, then ESI may be applicable. So all that will depend on the threshold. Now, if I have, suppose, an NGO which has just 5 employees means employer-employee relationship, then neither the ESI Act nor the EPF Act nor the Gratuity Act will be applicable. So they might be kind of a permanent employee or open contract. Permanent employee तो कुछ नहीं होता, open contract है where the date is not mentioned, or you might have a contractual engagement as an employee also, okay, where there is an employer-employee relationship, but because you are not crossing the threshold, the social security laws will not be applicable. So you have to understand that. If we are preparing purchase order, whether it is compulsory to take pre-quotation, again, purchase order is not linked to quotations. Procurement method is linked to quotations. Purchase order is the outcome of the procurement method. Is quotation mandatory for going with same vendor for same similar kind of services? Again, similar kind of services, I had already told you, you can go in for an annual rate contract. We are going in with same vendor. So with the same vendor, you will go for, so for instance, from 1st April 2025 to 31st March 2026, I have similar kind of goods or services. Okay. So can I go and say, well, I will do a contract with you, which is an annual rate contract. And with that vendor or two vendors or three vendors, depending upon volume, you might go in with the annual rate contract or an annual maintenance contract with, and then you can do it with the same vendor. But you have done competitive price discovery before you have enrolled a vendor for annual rate contract. Should I capitalize fixed asset if we signed MOU that all asset will hand over to the beneficiary? No, you do not have to do that. If the assets are to be if you have to part with the asset at the end of the project period, please do not include them in your fixed assets. Okay. Uh, uh, I don't understand. If they are not returnable, then definitely. So it will all depend on the MOU condition. So there are two situations, Vivek, in a donor contract. One is where the donor contract says, well, these are fixed assets as part of your budget and your proposal are your fixed assets, and at time of project closure or grant closure, you keep these assets. Okay, then you have to capitalize. You have to include them in your fixed asset schedule right from day one, the time you purchase. But if there is a condition in the grant contract that these are not your assets, but these are have to be transferred to the public authority or to the SHG or the collective or the group of beneficiaries, then Do not record them as fixed assets because you will have to part with them at the end of the project period, or maybe at some particular point of time and the project once you have completed the use. So suppose there is a solar pump. I mean, just giving that same example, solar pump is a fixed asset because it is not consumable. It is not have it has an economic life of more than 1 year. It is more than 5,000. Now, that is a fixed asset, that is an asset that we have purchased. In our budget, we will show it as cost of capital cost. Okay. But we have decided that this particular thing will go to the beneficiary or a group of farmers or the village community at large as a common property. Common property. Okay. Then in that case, please do not include it. You will have to show it as a capital cost purchased for the community and report to your donor. But in your account books, please do not include it because that is not going to be retained by you. All right, I think I have explained that. Come on, let's have questions if there are any. Uh, uh, three, 4 minutes, and over to you, Indrani. I think I have answered all the questions. If I've still not answered, please unmute and ask, and I'll answer. Uh, Sujata says excellent. So my excellent definition will be based on your use of this resource on your desk as a programmer. That will be the acid test of uh, kind of how it will be used. I have tried my level best to explain it to you without making it complicated. Okay. But all the time bringing you into the picture and telling you you are an integral part of this process. That if you recognize your interest in this particular topic and especially procurement in your organization will automatically go up. It will also ensure that you go up the hierarchy in due course of time. This is also something that I can promise to you. Uh, Indraneel, over to you.
Thank you, sir, very much for the enriching session, like always.
Thank you very much.
Thank you, Ben. Bye.